With the recession in full effect, many people's eyes are turning to Wall Street, especially to mortgage rates and their 401ks. Our financial guru, Ray Martin, is here to answer some of your questions this morning. For those of us who still have 401ks, with some it's 201s, some are bad as 101s. Yeah, I've got a question for you before we start off here. This is one of the nice parts about being in this role. We talked earlier about the Fed's announcement of injecting another $1 trillion into the economy right now. Going to bring mortgage rates down?
It actually already has here. Chris, the Fed is going to be buying some $300 billion in treasuries, raising the limit on mortgage-backed securities at Fannie Mae and Freddie Mac and on the government-owned entities by another $5.25 billion. This will bring the rate down on mortgages, mortgage securities. As a matter of fact, the Wall Street Journal had a note this morning that the 30-year fixed-rate benchmark mortgage is below 5%, around 4.75%. Call your mortgage broker. They're probably busy right now than ever that they've been in the last year. Call them now and start looking at refinancing. If you have a mortgage and the high 5% interest rates are higher,
bring it down.
You can bring it down by refinancing.
All right, let's go to the questions now. Deb in Ohio writes and asks, I lost my job. Should I leave my 401k with my old company or transfer it to a broker?
Yeah, that is the question for job changers now here. There are advantages and disadvantages to each, for rolling over to an IRA versus a 401k. You need to carefully consider those. First, let's take a look at the advantages of rolling over to an IRA. An IRA is an individual account, not a group plan here, so it has a lot of flexibility. You're going to have thousands of investment choices, any no-load mutual fund, any stock or bond. You'll be able to take withdrawals any day you want, whereas a 401k may limit you to taking withdrawals every quarter. You're going to be able to make transactions anytime you want, and there are more penalty-free withdrawal exceptions from the 10% early withdrawal penalty tax in an IRA versus a 401k here.
Okay, let's move to the next letter right now. My husband lost his job last May. My lender has worked with me to defer 2 car payments. Now, the payment was due yesterday. I don't have the money. How long do I have before the truck is repossessed? Pat, we thank you for that question.
Yeah, Pat, that's a difficult situation. This is timely because we heard that auto loans in delinquency 60 days more past due rose to 8.9% in the fourth quarter. They're likely to be a high point in a decade by this year here. Pat's doing what she can. Call your lender, speak with them, lay it on the line, talk with about your finances, see if you can defer a payment, change the due date of the payment. You have to look at this. Is the loan higher than the value of the truck? And if it is, the lender will be more motivated to collect something from you. But Pat, here's another thing to consider. If you owe less than the truck is worth, you might consider selling the truck, paying off the loan, being debt-free, and use that extra cash from the sale to go buy another vehicle just to get you from A to B, and you'll be debt-free.
Something that's going to cost a little less money on a monthly basis. Third question for you right now. And we received a lot of emails along this line. Will people on Social Security, will they get a stimulus check this year? That's Robert in Illinois. Okay, yes, they will. This alludes to that thing about the payroll taxes being lower for people who have wages. But if you don't have wages, you just get Social Security. What's your tax break? You will receive a $250 one-time payment by May or June this year, and it'll be in your Social Security payment, either electronically deposited in your bank account as a separate payment or by a check in the mail if you get your Social Security check by a check. $250 coming end of May or June. So be on the lookout, Ray. Thank you very much.